Thank you, Mr. Uttam Bagri. Now I would request, now give a brief introduction of our today's speaker. Today's speaker is Ms. Sindhu Pancholi, Deputy General Manager from Reserve Bank of India, from the Department of Non-Banking Supervision. So ma'am will be taking us through the presentation, and after that there will be a question answer session. So I request ma'am to please come and take the presentation.
Yeah, good afternoon everyone. Today the topic is about NBFC's regulatory framework in India general. This topic, when we start, the first question that would come to our mind is, what is an NBFC? Today if you ask anybody in the public what is an NBFC, I don't think you will get a correct answer. There is a lot of confusion in the mind of public, even other regulators also. Like in the papers and all that, if we read, there is a, some entity or some firm has collected money unauthorizedly from public. First, the thought that comes to the mind of the public is that R.B.I is the regulator. That is not so. So then the question comes, what is regulated? I mean, what does R.B.I regulate? So R.B.I regulates NBFCs. Then the next question comes is, then what is an NBFC? Any company which is doing any financial activity, is it such a company can be called as NBFC? Or do we have a specific definition and specific category of companies doing financial activity which are required to get registered with R.B.I? So we have, today's presentation I have just structured in this manner: definition, an overview of the regulation over the years, especially 1997, 2005 and 6, 2 slides on international scenario and certain recent developments. Coming to the definition of an NBFC, which is regulated by R.B.I, is that if a company is engaged in the business of lending or investment or leasing or hire purchase, insurance, chit fund, or receiving deposits as its principal business. But if any company is doing the above activities, but its principal business, if it is agriculture or industrial activity or trading, it is not an NBFC. To be called as an NBFC registered with R.B.I, its characteristics should be predominantly financial. That means its principal business should be financial. If it is doing lending activity, that lending activity should be principal business and not lesser than that. So what is principal business then? Principal business R.B.I defined through a press release in 1999, where we said NBFC to be registered with R.B.I, a company to be called as an NBFC registered with, to be requiring registration with R.B.I, it has to have at least 50% of its assets as financial assets and at least 50% of the income from that financial activity. So a company which is doing agricultural activity, part-time lending, will not be registered and regulated by R.B.I if it is not fulfilling this 50-50 criteria. So over the years, what we have done is, NBFCs, then it is a very heterogeneous group. It is not like a bank. Uniformity in its activities. It is not so. NBFC means anything other than a financial company. Rough definition is like anybody doing financial activity, the principal business other than a bank. So now insurance and chit is also an NBFC activity, but to avoid dual regulation, they are with other regulators. We do not register them. So over the years, what has happened is, if you look into the types of NBFCs that are there with R.B.I, you can see that there are legacy companies, deposit taking companies. We are not given a registration for deposit taking after 1998. All the deposit taking companies that we presently have are all those registered before 98. So we have deposit taking NBFCs, we have non-deposit taking NBFCs. Non-deposit taking NBFCs also, once they cross their asset size to 100 crore and above, they become systemically important non-deposit taking NBFCs. This is one sort of a classification. But other classification is based on the activities that they undertake. So we have asset finance companies. I will explain it little bit. See, most of your NBFCs also, we were representatives from NBFCs also, you will be knowing it. But still, I will get back to the definitions subsequent slide. Asset finance companies, loan companies, investment companies, infrastructure finance companies, IDFs, core investment companies, microfinance, factors, residuary non-banking companies. Residuary non-banking company, one example can you give me? RNBC. Sahara Financial is one of the RNBCs we have. Then non-operative financial holding company. See, there are other NBFCs also apart from this. For example, primary dealers is an NBFC. Registered with DNBS, but regulation is done by another department. Loan company is a company which is engaged in lending assets principal business. Investment company, most of you must be an investment NBFC. Investment company is an NBFC which is doing assets principal business, investment in shares and securities. Asset finance company is nothing but a loan company, but 60%, at least 60% of its total assets and income is for lending to productive activity, productive economic activity. For example, you know that loan is given to buy a say tractor or lathe machine or agricultural equipment. So that we treat it as lending for productive purpose or economic activity. And if a company is doing that at least to the 60% of its total assets, it is classified as an asset finance company. Why the separate classification? Because if you are an asset finance company, you have certain dispensations that you can enjoy. For example, you can have additional bank finance, you can avail ECB through automatic route, you can have higher exposure norms, because we feel that they are doing some, something more towards the society, encouraging economic activity. So these companies are sort of encouraged by giving certain dispensations. That is why this differentiation is there. Otherwise, there is no difference between per se, this loan company and asset finance company. This is the difference. Similarly, infrastructure finance company. What is the difference? The difference is that it is also a lending company. What is the difference? It is lending more towards the infrastructure sector. So again, we feel that since it is exclusively, or at least to the extent of 75% of its assets is towards the infrastructure sector, we feel that they should be encouraged. So certain dispensations again are given to them. What are the dispensations? Again, bank finance, exposure norms, then ECB, certain risk weight concessions are also given. There is another category, infrastructure debt fund NBFC, a very recent category. That is again, is a form of an IFC, infrastructure finance company. The only difference is that not only infrastructure finance company, but it will be lending, it will be dealing with only those infrastructure loans related to projects that are already successful, running successfully for the past 1 year. So again, they have been given certain dispensations. Now another category is core investment company. Core investment company is, simply speaking, a strategic holding company. You have in your group so many companies doing different activities. You have found a holding company which will be holding shares of all these group companies. So why such companies are there? They actually fall under the category of investment company. But the subtle difference is that it is not like any other investment company which is trading in shares, investing, selling, purchasing and all. So the risks are also very less. What does it do? It simply holds shares of its group companies, and for holding purpose, it is not trading those shares. So there is another category, core investment company, and regulation of this core investment company vis-a-vis investment company is less stringent. That is why we have this category. so as to identify such investment companies and to apply regulation differentially. So core investment company would be holding not less than 90% of its total assets in group company shares, debentures, preference shares, or as a loan to the group companies only. And that too 60% should be in equity shares. Among the CICs, we feel if they are only investing in group companies using their own funds, risks are nil. So we don't regulate them at all. If they are investing in using own funds, we don't regulate them. We regulate them only if they are accessing public funds, and that too if their asset size is more than 100 crore. Rest of them are exempted from regulation. Another recent category, like 2011, December 2011, we formed MFIs. Most of you must be aware about the turmoil that happened in the MFI sector, especially in Andhra Pradesh. So there was a outcry to that R.B.I should step in and the regulation of MFIs should be streamlined to avoid the crisis that was happening in Andhra Pradesh. Subsequently, R.B.I appointed a committee under the chairmanship of Sri Malagam, and he recommended that NBFC, separate category of NBFC may be created as NBFC MFIs, and a separate set of regulation may be made applicable to them so that they can be carefully monitored. They can be carefully monitored on their activity, because the main criticism on those NBFC MFIs were that coercive practices, alleged recovery practices. So the committee felt that their operations should be monitored closely. So we created a separate category, NBFC MFIs, and for them, NBFC MFIs, the criteria itself is a little bit very stringent, but if they are fulfilling all these, they have got dispensations in the sense that if a bank is lending to an NBFC MFI, it is treated as priority sector lending. So this NBFC will get funds from banks at a lesser rate compared to other NBFCs, because it is treated as priority sector lending. But the criteria that an NBFC MFI has to fulfill is definitely stringent. That it has to comply, it has to ensure that the borrower, the indebtedness of the borrower is not crossing 50,000 rupees. First cycle 35,000 only he can lend. Second cycle 50,000. If it is tenure is less than 24 months, loan amount should not be 15,000. So many conditions are there. Another category, one of the recent categories is NBFC factors. NBFC factors, I don't know anybody is related to factoring NBFC in this group? No. You are there? Which factoring company? Okay, I can help. NBFC factor is a non-deposit taking NBFC engaged in the principal business of factoring. The factoring operational aspects, legal aspects, everything is covered by Factoring Regulation Act of the Government of India. If somebody is registered under the Factoring Regulation Act, they will get stamp duty exemption for their factoring transactions and legal protection for their transactions. If somebody is, some NBFC is doing factoring and is registered under the Factoring Regulation Act, there is legal protection under the Factoring Regulation Act. What we do is registration of that NBFC as NBFC factors and applying the prudential norms. Prudential norms part is taken care of by R.B.I. Operational aspects and legal aspects of factoring business is covered by Government of India Factoring Regulation Act 2011. Another, NBFC is a non-operative financial holding company. This is, though is an NBFC, it will be getting registered as an NBFC in Department of Non-Banking Supervision. It is only like the CIC, that I spoke of some time back. It's a holding company of the new bank. So no NOFHC has been registered so far. It is a holding company of the new banks. Regulation and all are taken care of by the banking department of R.B.I. There is something called residuary non-banking financial company. Like I said, Sahara is one example. Presently, we only have 2 RNBCs, Sahara and Peerless. Both are under winding mode because we have asked them that by June 30, 2015, you have to wind up your business of deposit acceptance, and you have to take up some other alternate business, or you have to wind up. Because RMBC business model, we feel it is not a sustainable model. It is just collecting deposits. Okay. Overview of NBFC regulation, is like, since most of you are from NBFCs, there are prudential norms. What is prudential norms? Prudential norms means that particular individual NBFC has to follow 1, 2, 3, 4 norms. NPA norms, asset classification norms, CRAR, exposure norms. This is called direct regulation. Simply, NBFC, you have to follow this. There is something called indirect regulation. What do we do that? We say, we advise banks, you do not lend to NBFC more than this percent. So presently we have bank lending to NBFCs is restricted to banks, 10% of capital funds. I think that, again I said in the case of AFCs and IFCs there is a dispensation. So a bank can lend 15% of its capital funds to an IFC or IFC. But for other NBFCs, it is 10% of its capital funds. In the case of gold loan NBFCs, it is not a category per se, but NBFCs lending against gold jewelry, exposure has to be 7.5%. So that is called indirect regulation. We are not directly regulating the NBFCs, we are asking the banks, restrict your fund distribution, allocation to NBFC sector. That itself will curtail the NBFC activity overall. That is indirect regulation. Third is macroprudential measures. Macroprudential measures is also part of NBFC direct regulation. But like, for example, most of the measures that we have are both micro and macro that way. Macroprudential measures, one of the example is like in the case of banks, countercyclical capital buffer. It will have an overall, taking into the consideration of the overall economy and the sector, market, financial markets, some measures that will come out. That is macroprudential. And then we have this activities getting regulated. See, for any NBFC, it has to follow prudential norms. But if you are doing lending against gold jewelry, you have to follow LTV. If you are for your loans. That is only because of this activity. So activity specific regulation is also there. This is in general, the combination of regulatory practices that we follow for the NBFC sector in India. We will see whether this is different from international subsequently. So the regulatory framework, you may be aware that, this NBFCs prior to 1997 were not regulated at all. Practically they were there running havoc, what they were doing was they used to collect deposits, not all, but at least few. They used to collect deposits, fly-by-night operators. So there were a lot of hue and cry that these companies doing financial business and collecting public money without any accountability and responsibility should be regulated. So that is why, even though in 1963 we had this chapter 3B of R.B.I. Act whereby these NBFCs are sort of regulated, R.B.I. didn't have much powers under the R.B.I. Act then. Subsequently in 1997 we amended the R.B.I. Act giving substantial powers to R.B.I. to comprehensively regulate NBFC sector. But in 1997 when the regulatory framework came out, the main focus was on depositor protection. It continued till 2005. In 2005, we said customers, consumers, the asset side consumers also should be taken care of, and that is how this Fair Practices Code came into existence. We issued in 2005, September 2005, guidelines on Fair Practices Code. That is what some minimum set of fair practices NBFCs should follow while doing lending. Then in 2006, we went a step ahead. That is in 2004-05, R.B.I. said one of the explicit objectives of monetary policy would be financial stability of the country. Financial stability means systemic risk concerns should be addressed. So then when you look into the entities that you are regulating, whether systemic risk existed, Yes, as the size of the NBFCs increase, systemic risk concerns increase because of their leverage. Because they access bank funds, if they are not regulated comprehensively, there is a systemic risk. So in 2006 we said, among non-deposit taking NBFCs, we should identify systemically important NBFCs, and we said those with asset size 100 crore and above will be NBFCs NDSI. For them, the prudential norms became a little bit more stringent with exposure norms and capital adequacy norms. Otherwise, you know that less than 100 crore companies do not have CRAR or exposure norms. Only those with 100 crore and above and deposit taking companies have this. So, and further, so depositor protection, customer protection, financial stability, and also regulatory arbitrage. So, even though explicitly we would say depositor protection, customer protection, financial stability, underlying there is an objective, that is regulatory arbitrage. If banks and NBFCs are doing the same activity, banks are stringently regulated, NBFCs are loosely regulated, then that is called regulatory arbitrage. So wherever possible, regulatory arbitrage is also addressed through our regulation. So generally now you know what are the regulation consists of. That is for an NBFC, if an NBFC is formed, first step is getting registered with R.B.I. It should have a minimum NOF, net owned funds of. What is the minimum NOF of an NBFC to get registered? 2 crore, 200 lakhs, 2 crore. It varies actually. If it is an IFC, it should be 300 crore. For an IDF NBFC, it is a 300 crore. MFI, it is 5 crore. Factors, 5 crore. For otherwise, in general NBFCs, it is a 2 crore. Now, in every NBFC has to have a reserve fund to which it has to transfer at least 20% of its net profit every year. Then prudential norms are equally, uniformly applicable to all the NBFCs. Only the extent varies. Then all the NBFCs have to submit various returns to R.B.I. Of course, non-deposit taking small NBFCs need to submit only one statutory auditor certificate. There are penal provisions given in R.B.I. Act if NBFCs are violating its directions, guidelines of the R.B.I. Act. Supervisory powers are also vested in R.B.I. Presently, because we do not supervise small NBFCs, mainly we supervise bigger NBFCs only, but then we can any time, we have the power to supervise any NBFC. Specifically coming to NBFCs deregulation, NBFC, that is deposit taking companies regulation, there is a sort of an SLR. It is not called as SLR per se, but outstanding deposit liabilities, some percentage of that has to be kept in liquid securities, approved liquid securities, or to some extent in bank deposits. So that some sort of a protection is there for depositors. Then we have this Depositors Direction 1998. You maybe one of you are from a deposit taking company, so it's not that applicable to you. But otherwise, if it is a deposit taking company, it has to have, there is a ceiling on its quantum of public deposits that is to be accepted by it. And how is the ceiling determined? Ceiling is determined based on its credit rating. Do you have minimum investment credit rating? Are you compliant with all the prudential norms? Are you having a CRAR of 15%? Then you can accept public deposits to the extent of 4 times of its net owned fund if you are an AFC. See, again there is a dispensation to AFC. Other companies only 1.5 times of its NOF. Period of deposits is a fixed deposit only, no demand deposits. Ceiling on interest rate is also there, presently 12.5%. Prudential norms are the same for both deposit taking companies and non-deposit taking companies. Much change is not there. Asset classification, provisioning norms, CRAR, exposure norms. Exposure norms that for a single party or a group of parties, you cannot have exposure more than 15% of your own funds. Group entity 25%, not more than 25% of your own funds. Then for an deposit taking company, for change in management, control, transfer, you need to have prior approval of R.B.I. NBFC's ND, prudential norms same. NDSI, additionally you have CRAR and exposure norms. So many returns are also required to be submitted by NDSI. That is on its financial parameters, ALM. Other small companies less than 100 crore only, statutory auditor certificate. But if you are a company having assets between 50 crore and 100 crore, there is a return for you. Less than 50 crore, no return, only statutory. Of course, there is a return if you are doing an overseas investment. That is something different. If you are not doing any overseas investment, if you do not have any investment in insurance sector at all, you only have to, Coming to international scenario, just before we go to the recent developments, we'll just touch upon the international scenario. I told you, if you remember in the beginning, that our present regulation is direct regulation, indirect regulation through banks, macro-prudential and activity-based. If you see, this was the, since beginning for NBFCs in India, say 1997, and then subsequently by 2006 we had all this. This FSB regulation, that is FSB is Financial Stability Board. This FSB regulation, if you see, basically came after the that financial crisis. And if you see all this, we already were following. If you just see, you will feel that this they are copied from us, but it's not so. But we already had all this in place. Direct regulation, indirect regulation, regulation of shadow banks. Shadow banks is the generic term given by FSB for non-banks doing credit intermediation. Simply speaking, NBFCs all fall under shadow banks. It's a generic term given to all entities other than banks who is doing credit intermediation. Then macro-prudential measures also. In the case of US, if you see, Dodd-Frank Act, see, we have this 50-50 criteria. US has 85 or 85 criteria. That also it has come after the global financial crisis. Dodd-Frank Act is after the GFC. They have 85 or 85 criteria. Okay. Okay. Some of the guidelines that we have here for NBFCs. I have only listed down some few guidelines which I felt important. One is that overseas investment by an NBFC. Even if it is a non-deposit taking company with an asset size lesser than 100 crore, it has to follow these guidelines completely. It has to submit a return quarterly. It has to have even CRAR. If you are a small NBFC planning to do an overseas investment abroad, you have a CRAR requirement also. Okay. Now, generally, not generally, but for all NBFCs, investment in non-financial service sectors is not permitted. If you are investing abroad, it has to be in a sector which is regulated, which is regulated by a financial regulator there. And the extent of investment that you can make overall, whichever number, how many number of companies ever that you have formed outside subsidiaries, joint ventures, total investment should not be more than 100% of your, the domestic and parent NBFC cannot give any guarantee or letter of comfort or any such, outside balance sheet, off balance sheet support to the subsidiary. No. There is a quarterly return that the company has to submit to the bank. Now, coming to CICs, it is a little bit, I said CIC, the concerns are a little bit lesser compared to an NBFC. And its main activity is investment for holding purpose. So, if it is investing overseas for holding purpose, we say that, you can, instead of that 100% limit, you can go to the extent of 400% of the total investments, 400% of the own funds. Financial sector, 200%. You have to submit the quarterly return as well as the annual statutory auditor return. Approval from R.B.I is required only if you are investing in financial sector. Then suppose an NBFC wants to invest in domestic insurance joint venture. Then of course it needs an R.B.I prior approval. If you are planning to invest in insurance sector, you have to have high net worth. Your NOF should be at least rupees 500 crore. The own funds should at least be rupees 500 crore. And then the maximum contribution that you can make is only 50% of the paid capital of the insurance venture, all your group entities, everybody together. But a relaxation is possible here on a case-to-case basis. Suppose IRDA says, because of some IRDA regulation that more than 50% investment is required, R.B.I permits it on a case-to-merit basis. See, this is fair practices code. If any of your NBFC is into lending, this is one aspect which is gaining importance, very high importance over the years, especially after the MFI crisis and the, lending against gold jewelry companies. Fair practices code is something which is very, very, very important. Non-compliance of which can invoke penal provisions. And mind you, this is not a very strict type of thing like some written percentage is not there. It is all sorts general that the loans and term conditions, the conditions and terms and conditions of the loan should be very clear. When you have given a loan, the person, the borrower should be aware of all the terms and conditions. If the borrower can establish that I was not aware of this, then that is violation of FPC. Such general regulations, fair practices code is a general thing. Terms and conditions should be made clear upfront, very transparent. Board approved policy, fair practices, the code should be there with a board approved, as a board approved policy. There is a lot of disputes when an NBFC goes after a borrower and try to repossess the asset. Say it is an asset-backed loan, and if the borrower didn't repay, now the NBFC goes to repossess the asset. There is going to be a dispute. In order to avoid that, what we have said is that you please incorporate a repossession clause in the loans, terms and conditions, so that later the dispute is got at least some legal backing in the court. Then for NBFC MFIs, we have given an enhanced FPC saying coercive methods of recovery should not be there. Try to collect loans at a central location. The security deposits margin not to be taken from clients, etc. Similarly, the gold jewellery companies, the NBFC is lending against gold jewellery. What we have said is that if you are doing auction, it should be very transparent process. Proper KYC, because they say it is a 3-minute loan. So we say that have you done the KYC on the client in just 2-3 minutes? So that is why we said there should be proper KYC on clients. Ownership of collateral should be established. At least you try to have some document with you to establish the ownership of the collateral, etc. Then there is recently we had issued in June 2013 and July 2013. We came out with 2 circulars on private placement of NCDs, non-convertible debentures. See, in Companies Act, I'm talking about 1956 Companies Act. There was this clause on private placement. Any company which is doing private placement cannot have more than 49 investors. Then it becomes public issue. NBFCs and PFIs, public financial institutions, were exempted from this. So there was no issue, but then subsequently what we saw was that lot of concerns, it is getting, private placement, the whole idea is to have, not to go that much retail. Ideally we feel that, private placement means institutional. If you go into very retail, like, 1,000 rupees, minimum subscription. It is simply like collecting deposits. The boundary between deposits and debentures vanish. First of all, it may be unsecured also, could be unsecured also. So the boundary, unsecured debentures, by the way, is treated as deposits. So if the boundary between debentures and deposits, when it is lost, but then you can give as retail also, then there are concerns. So in June 2014, we came out with a regulation saying that this 49 is removed. That means private placement means it has to be 49, less than 49. Then minimum subscription of 10 lakh, all issues to be secured. But presently, based on the feedback and also the New Companies Act 2013 has covered this private placement comprehensively, covering all aspects. It has in fact come out with that the NBFC is also private placement, they have to have a DRR and all. Debenture redemption reserve. It's comprehensively covering this. So this particular guidelines are under review. Lending against gold jewellery is, I have told you, there is an LTV. For every loan, they have to maintain an LTV of 75%. It was 60%, raised to 75% recently. They have to disclose in the balance sheet the extent of such loans, given against collateral of gold jewellery. And they have to have a Tier 1 capital of 12%. They need R.B.I prior approval for opening more than 1,000 branches. This is the recent guidelines on restructuring. Restructuring, previously for banks, the restructuring, there were comprehensive. For banks presently also, there are comprehensive guidelines are there. In the case of NBFC, such a comprehensive guidelines were not there. All that we said was that If you are restructuring, the account will immediately become NPA. The moment you restructure or renegotiate an account, it will become an NPA. Except infrastructure loan, and that for the first time. If you are restructuring for the first time of an infrastructure loan, it will not become NPA. Second time it will. But in the case of banks, dispensation was given for lot many loans, not only infrastructure loans, so many other loans. For NBFCs it was not there. Then requests started pouring in from the sector, and then we considered, and there was a Mahapatra committee which went into this revamp of restructuring guidelines of banks based, in the context of the NPA baggage of banks, which revamped the guidelines. Simultaneously, NBFC guidelines were also harmonized with that of bank guidelines. The most important aspect of one of the provisions of this guidelines is that if it is the restructuring is DCCO related delays, the borrower is not paid on due date, but it is because of a delay in DCCO. DCCO is that commencement of operation, date of commencement of operation. If he is unable to repay because of the delay in DCCO, it will not be treated as restructuring. That means it is a standard good account for 2 years in the case of infra, and 1 year in the case of non-infra and CRE project loans. Now, after the above period, suppose in the case of an infrastructure loan, for 2 years, some DCCO related delay was there. Okay, it is not treated as an NPA, it is standard. After 2 years also that delay is persisting. Then we said, for some specified period, you can restructure, but you can retain the standard asset classification for certain period, provided you have to have an additional provision. That's all. That's the difference. That is there for only infra and non-infra, and not for commercial real estate. So, additionally what we said, presently banks can restructure and retain the asset classification benefit, that is standard asset. It will not become NPA for certain loans other than infra, non-infra and CRE. We said NBFCs also can retain the standard asset classification after restructuring, provided it is under CDR, multiple bank. Suppose you are doing it with more than one lender, that is bank and all are there in the consortium, and then you are doing it, then you can follow bank norms. If bank is not classifying it as a NPA, you also need not classify. And for banks as well as NBFCs, this is there only until April 1, 2015. After April 1, 2015, only DCCO related delays will get this special asset classification benefit. Rest of them all will be treated as NPA upon restructuring. Then we had come out in March 2014, a circular on early recognition of distressed assets. Now, because of this big NPA problem, you may be aware of the NPA problem of our banking sector. It was viewed very seriously, not only by the R.B.I. but also by the government. And R.B.I. was supposed to look into this and come out with some measures to how to deal with the NPA problem of banking sector especially, and financial regulated entities. So we came out with this how to recognize early this distressed assets. Even before an account becomes NPA, can you identify distress in an asset and start corrective measures? Simple. That is the sum and substance of this guidelines, to identify distress in an asset before it becomes NPA. So we have said such accounts, if certain criteria is given, if it is fulfilling that, it becomes special mention accounts, and you have to report them to R.B.I. I would like to touch upon on this ECB, external commercial borrowing for NBFCs. What are the guidelines? External commercial borrowing for NBFCs, there are two routes, automatic route and approval route. If you are eligible for, availing external commercial borrowing from outside India, only infrastructure finance companies, NBFC, MFIs, CICs and AFCs are eligible for availing this ECB on automatic route. Everybody is eligible for this thing from under approval route. Approval route is through government. FIPB is there. Approval route is through government. Automatic means you do not go through these channels. It is automatic. So through authorized dealers. So NBFC, AFCs, IFCs and NBFC, AFCs, IFCs and CICs, they can have a ECB through automatic route for related to infrastructure. NBFC MFI is related to MFI. Separate limits, end use restriction, from whom you can avail ECB. There are a lot of such restrictions which are there in the, all these things you can, you will get from the master circulars of R.B.I. These are some of the returns that say NBFCs, deposit taking NBFCs, these are the returns an NBFC, deposit taking NBFC is required to, submit to R.B.I. All are quarterly except 1 or 2. 15 days time limit is given for submitting these returns. Assets and liabilities, their financial parameters, liquid asset maintenance, capital market exposure, then structural liquidity ALM. This is by NDSI. There is a financial parameter return monthly, then about general capital funds, then again short-term dynamic liquidity and structural liquidity are ALM returns. This is a return for non-depositing company of asset size between 50 crore and 100 crore. Only one return is there. Just to know that they are not crossed that 100 crore. If they are crossed 100 crore, we will ask them to come under NDSI regulation. So that's it. So anything specific that you want to?
Now the floor is open for question answer session. You can please raise your specific queries. The mic is available.
We have sent one question as have you received it? Arek from Action Finance. I have sent one question. It's a specific case based. You have that question with you?
It's already forwarded.
Yeah, we have forwarded.
Is it related to restructuring? Yeah, the question is someone is having both, it's a SEBI registered broker. It also has an NBFC license, like we were discussing in the beginning. So now I think SEBI is not permitting brokers to have NBFC license. That's what I understand from it. Is that so? So SEBI do not permit that broking company to hold an NBFC license of R.B.I. That's what you're saying, no? Is it so? No, but here you say, okay, company need to activate the NBFC activities, but being registered with SEBI, NBFC activities cannot be activated in the same name. R.B.I. told this or SEBI?
R.B.I.
Okay. So basically what you should do is, you have to come to us, get the, transfer that NBFC activity to another NBFC.
At present we don't have any NBFC activity. We would like to do it start now. So for that particular purpose, I wanted to have some.
For the only option is that either you hive off, form another subsidiary and hive off the broking activity to that. You remain as an NBFC, so you need not come to us again. So which one is easier for you? It is easy to get a broking license, or it is easy to, but already that license is there, no? Transfer that license to the new subsidiary, broking license.
Broking is a bit difficult to transfer. There is a lot of activities which is there. NBFC, can we do it? Can we transfer 100% subsidy to a subsidy, 100% subsidy?
How the modalities and all that, you will have to come and speak to the regional office. It is a Bombay-based company.
Yeah.
You have to contact the Bombay, our regional office in Worli. And see, but for 1 year we have suspended all COR listing. So whether this will fall under, most probably this will not fall under, because already you are having an NBFC license. All that you have to do is you want to hive off. I don't think there is any problem.
What is the procedure for that?
Procedure is that you have to approach the regional office of R.B.I. in Worli and tell your intention. Okay, either through letter or in person, and then they will guide you what to do.
You have to take a prior approval, then go to the court route.
Prior approval and then go to?
Court route. Through a court route, can we...
No, see, you have to get a registration, new registration as an NBFC, no? Separately. You will form a separate entity as an NBFC, no?
Sir, present whatever license is there, can we transfer the same license to 100% subsidiary company of this?
Since it is, the dual regulation is not, basically presently is not encouraged much, I think this is possible. There wouldn't be any problem. Because already, see, both the regulators have given you the registration. Both the regulators have given you the registration. You are holding it because the registration is given by the regulators. So now you are saying, we are ready to hive off, because you are saying R.B.I. said asked you to hive off. So you say, I am ready to hive off. Please, transfer my this thing. It's possible. I don't think any problem is there. That's all, no?
Madam, can NDA companies, non-deposit accepted company, accept the intercorporate loans?
Accept
Accept the intercorporate loans.
Intercorporate?
Yeah, intercorporate loans.
Intercorporate bonds?
Loans.
I said intercorporate deposits, no? Yeah, it is, no.
It can be accepted.
It is, see, we have given the definition of what is deposit in R.B.I. Act as well as Deposit Directions 1998. If you go through that, we have given specific exemption to intercorporate deposits from the definition of deposit. That means you can have intercorporate deposits, and companies do have intercorporate deposits. It is not treated as public deposit.
Okay, and it can be from the broker also, broker company?
Broker company? Yeah, can you take a broker?
It's a company, it's a semi-registered company. And
Can you?
NBFC is a separate company. Yeah.
We have not mentioned anything, ICD should be from this company, that company. We only have said ICDs. Yeah, of course you can have, if the broking company is permitted by SEBI. I don't think there is a problem. And this is restructuring guidelines, no? Restructuring guidelines, if you see, is a comprehensive guidelines applicable to all loans. Applicable to all loans. The applicability but varies depending upon the infrastructure loan, non-infrastructure loan, CRE loan, that is commercial real estate loan, or the other loans. As I said, these guidelines are applicable to all loans, but if it is infrastructure related loan, or non-infrastructure related loan, or commercial real estate loan related to projects where DCCO related issues are there, then certain concessions are given. Where DCCO issue is not, that is non-project loans. Non-project loans, they, only if they are under CDR or consortium or multiple bank lending, they will get the dispensations, that is standard asset classification benefit dispensation, which you have said till April 2015. This is a difference, but otherwise the guidelines are applicable to all loans. Then there is a question on early recognition of financial distress circular. Lot of questions has been written here. This early recognition of financial distress circular and the return that is stipulated for NBFCs is basically for online reporting. It is a uniform platform where both NBFCs as well as banks will report. The analysis of data will be done of both NBFCs and banks. If particular borrower account of a bank becomes, is showing distress, not NPA but distress, then, and classified as SMA2 and all, and if so many other people also has exposure to that particular person, that particular borrower and particular loan, then it will, the corrective action plan will start. That is the crux of the whole thing. So a joint lenders forum will be formed based on IBA. Some IBA is given the responsibility to form the joint lenders forum thing and all. So if suppose an account, a borrower is an NPA, not NPA, showing distress before becoming NPA, one of the lenders has reported it to R.B.I. saying that this particular account is showing distress. It is an online thing. So all the other lenders of that particular loan will come to know, and they all will form together a joint lenders forum to initiate corrective action plan. That is how it is. Whatever queries, that the queries are, saying ki, what is the meaning of funded credit exposure? What is to be captured in industry code and industry name? See, this I will tell you. These doubts have come because for NBFCs, the online reporting platform has not yet been initiated. So if there is an online thing, once you go to that particular title of that particular column, it will say, this means that. Since that online thing is not started for NBFCs, these queries are coming. So presently NBFCs are required to submit hard copy. They need not worry about any of these things. Whatever information that they can give in hard copy is enough for the present. But once the online reporting starts, they have to follow it to the dot. But for the present, since they are only submitting hard copy, they can just provide whatever information that they can. Like for example, somebody is asking SMA0 reporting also is to be done. Hard copy, I would say, not necessary. SMA0, not necessary. SMA2 will be enough for the time being. Now this 5 million also somebody has asked. 5 million. That till June at least we have said, since you are submitting hard copy, 10 crore, reporting need be done only to the extent of 10 crore. 5 crore will start afterwards only. Okay. Basically, in this particular return, what NBFCs have to see that it is only hard copy submission till the time that online thing is initiated. Till that time, they need to submit whatever information that they can give, apart from SMA2 thing. Otherwise, it's okay. Anything else? Can a non-NBFC company having activities of only trades and currency futures, derivatives I think, trades and currency futures, trading in shares and securities, give intercorporate loans by taking intercorporate loans? See, I am not the competent authority here to talk about non-NBFC. NBFC, you ask me anything, I will tell you. Huh? You are asking whether this there is an NBFC activity to be registered. See, which for registration, I just listed down, that I have given you the definition of NBFC. Registration, they require, only if their activity is lending, investment, hire purchase, leasing, chit insurance, nidhi, are all with other regulators. Only these two. We have only lending, investment, lease, hire purchase, investment mein CIC वगैरह सब आ गया. All the categories that I told, factoring, everything, factoring, AFC, IFC, everything is under lending. Basically, we So only those companies engaged in lending, investment, hire purchase and leasing are required to be registered with us. And RNBC, that deposit acceptance. Uske alawa, all are with other regulators. See, if you are doing some currency futures, simply currency futures, I think you will have to, get registered with SEBI or I don't know who, FMC or somebody. Whether you are permitted at all, I have my doubts. But R.B.I will not come into the picture, actually. Trading in shares and securities is investment. No, suppose you are trading in shares and securities, then you become an NBFC. To the extent of 50-50, you are doing trading in shares and securities, you become an NBFC. Then the other activities that you undertake will be as per R.B.I guidelines. If R.B.I say, then you cannot, if you are undertaking interest rate futures activity, it should be only for users. Derivatives, then you can, derivatives market may, then you can participate only as users. Users, not market makers. You have to have positions. You are to hedge, as hedgers. F&O trade, what is F&O trade? F&O trade is a non-fund based activity, no?
No, but
no. See. But are these trades balance sheet related or off balance sheet? See, you may be taking positions and all, but you may not be holding that. Only profit and loss will be booked in your books. Are you holding 100 crore worth financial assets? You are not holding any assets. So where is the question of financial assets?
Should be financial asset income. If your balance sheet fits that criteria, you are supposed to get registered with R.B.I as NBFC. Both are required. And
the shares and security, whether there is a specific definition of security, is it under as per SCRA or any separate definition is given by me?
See, what we have not specified that. We have only said marketable securities. Marketable securities. We have not specifically said that, but securities is understandable, SRA only. If that is so, then I think derivatives, you are saying that derivatives will come. But then my question is, even if it is derivatives, say for example, see, R.B.I looks into the balance sheet thing. We do not register a company saying that it is an NBFC looking into his off-balance sheet position. On balance sheet, see, if balance sheet, whether it is dealing in derivatives or in other securities, if its balance sheet is holding financial assets, what is its balance sheet? Say it is having 100 crore and that 100 crore fund is the fund, worth thing is the. Derivatives are mostly like, if what I understand from what he is saying is that, he has taken a position. Either he will book profit or he will book loss. So there is not on balance sheet thing. In fact, such queries we have received, so far the stance we have taken. If we have taken the stance that no, even if you are, participating only in derivatives thing, because of the securities contraction, the contract act or whatever that is there, it is treated as a security. You are dealing with that financial securities. If we come out specifically like that, you will require registration. So far we have not said that. What we have said that, you have to see the balance sheet. What is the fund-based balance sheet thing that you have? Is it crossing 50%? When financial assets crossing 50%? And income from the financial thing. Obviously, dealing in derivatives, it is off balance sheet anyway. But on balance sheet, financial assets, are you having income more than 50%? That is the criteria. So specifically, though we are aware of this thing, formally and specifically, we have not come out with any, regulation to the effect saying that if you are dealing in only derivatives, you require registration. We are aware about it. Till the time it is not told to you, you have to go by the NBFC definition, and basically what I would suggest is you should take your opinion of your own auditors. What is the opinion of your own auditors? But otherwise, simply dealing in derivatives, only booking profit and loss, I don't think it will come.
Ma'am, one hypothetical example of the same thing. I have a company with net worth of 2 crore rupees. The entire 2 crore rupees I have given to my broker as margin. And I'm trading derivatives and I made a profit of 50 lakh rupees. Okay, now 100% of my profit is from financial assets. Okay, securities. So that part I am satisfied. But on my balance sheet side, my entire money is lying as a deposit with the broker. Now,
it is not deposit with broker.
So is that
actually you are trading, no?
Yeah, but I have to pay margin money to the broker to put that trade. So if my entire money is lying with the broker as margin money, is that money with the broker a financial asset as per R.B.I? I suppose that would be, if that question is answered, the query would be answered.
Such a question will come, this is basically to decide whether a company is an NBFC. Apart from this 2 crore, what you are saying, apart from the margin that you have given to the broker, what are your assets?
We were given to understand on this regard that whenever you have to consider the financial asset, as per the balance sheet, the financial asset having a linkage with the income relating to the interest rate.
Okay.
So that's the way you have to consider your financial assets. That was the clarification what we got.
See.
So I believe that any kind of this kind of deposit which is given to a broker for the purpose of doing business, which has no linkage with the interest income, either the given or received on either side.
See, to that extent, we have come out with the circular saying that bank deposits kept with banks is not financial assets. Deposits with banks is not financial assets. So, but then this question will come. See, you mean to say that if you add this 2 crore, then you will be required to get registration. That is why you are asking this question. But then otherwise, you are simply. But then see, this 2 crore you have kept as margin money, and so what is your activity? Trading in derivatives. Okay. Trading in derivatives, if it is not coming under NBFC activity, if this 2 crore, whatever this deposit that you have kept, if it is coming under NBFC activity, you want to know whether you require registration or not. I think deposits will not come under this. See, it is actually as an offshoot of this derivative business. For derivative business, you have kept a deposit, part of the derivative thing. Okay, but then this fund, because there is a fund thing on balance sheet, it is there. That is why you are asking that question. Okay, I think this needs a little bit examination. As of now, I would say that presently we have not come out formally saying that only if you are doing derivative thing, off balance sheet thing, it will not. But then in this particular situation, you have certain fund also on balance sheet thing, and you are doing certain derivative business. Only derivative business, we are not specifically, individual NBFCs we would have given comments, but formally we are not come out with.
Whether that broker is supposed to get registered as an NBFC?
Only if it's a company.
If it's a company, that's a company. That
of
company
course,
is a
company.
member of the
He's a
stock
company.
exchange.
Yeah, he's a company doing investments on his own behalf. More than 50% of his assets books is this investment. 50% the income from this investment. He has to get
And in
registered.
that case, how again the question comes that how one can have 2 registration.
That is why the present stance. That is why somebody from R.B.I. you are saying said you hide. We normally, as the informal stance is that that you hive off. Don't have so many registration, one with R.B.I, one with SBI. You hive off one activity into one subsidiary. In fact, this derivative thing, even if you have, it's not clear, I don't mind you send an email to me, no problem. We'll see. But otherwise, all that you have to see is the balance sheet thing. But with this deposit, 99% I feel it will not be counted. But still, for better clarity, you can make a reference, we'll see.
Ma'am, coming back to that early recognition of distressed assets, we have two specific queries. How should, the circular has just come in March 2014, how should we count the overdue period? Say, should we count it from 1st April, or we should take the original date from which the loan or the interest is overdue for categorization of SMA 0, 1, 2? And the second query is on the 61st day for any distressed assets in SMA 2 category, we have to report immediately, right? So, as the online portal is not available for NBFCs right now, how should we go about it?
No, you have to see, sir, till the time that online thing is not started, you simply report. Suppose one particular account has become SMA 2.
Right.
61st day itself, you just submit a hard copy to R.B.I.
Okay.
Address is given. It has to be submitted to the Department of Banking Supervision.
Okay.
You submit whatever. See, the query that is being raised is what is the how to fill up the number of fields. You need not, if you are not aware what it means, you need not fill up, because that will be clear only once that online thing is there. Online thing, when you click, it will show fund credit exposure means this.
Right.
Industry code. If you click there, it will say industry code for real estate is this. Right. So hard copy, we are not insisting on any of that. Hard copy is just a simple reporting, in the sense that if an account is become NPA, in SMA 2, you just report minimal reporting.
Okay.
This has already started.
Right.
Once it becomes online for NBFCs also, it will become very active. Monitoring will become very strict. Till the time that online thing is not there, we will say that the process has been initiated, that's all.
Madam, suppose if any loan by any lender is reported as SMA 2, and NBFC is also, another NBFC is having the same account, but at their end neither that is under stress, nor and they are fully secured, then in that case also, let's say suppose if joint lending forum requirement comes, and whether it is compulsory for that NBFC to join that lending?
Yeah, I think so. Yes, it is. That is why that joint lender, even if one lender, for one lender it is SMA 2, in the online situation, the moment you say one particular, there are 5 lenders for that particular loan, and one lender is saying it has become SMA 2, it will be, put in the online thing. It will be advised in the online thing. All the lenders can see. Then the moment that happens, then one of these people have to start the joint lenders forum, and corrective action plan is to initiate. But till the time that online thing has not started, it is very difficult. Hard, and you are submitting only hard copies. So you do not know personally, consortium and all that you know, CDR and all you know who are the other lenders. But if it is only multiple lending thing, loosely there are some 5 people, you don't know who the other lender is. In that case, that is not possible. So till the time that online thing comes, you need only submit the return.
Madam, regarding that non-cooperative borrower, as I understand that this guideline is applicable for where the loan is 5 crore and above. So that non-cooperative borrower categorization, identifying and reporting, that requirement will also be applicable for 5 crore and above loan or any?
5 crore and above, yes. But till June, 10 crore and above. Till June, 10 crore and above is okay. If you see the return, there we have mentioned 10 crore. In the circular it is 5 crore. After June it will become 5 crore. Till June, 10 crore is okay.
And in case of SMA 1 reporting, let's say any borrower who is not under stress, but due to some reason if he has crossed 30 days making the, let's say, interest payment, he pays on 31st day or 32nd day or 33rd day. Now this reporting is on a quarterly basis. So do that account needs to be reported, because
you are talking about SMA 0?
SMA 1.
SMA 1?
Where somebody, suppose for some reason he could not make the payment within 30 days. He pays on 31st day or 32nd or 33rd day, any of the day. But since this reporting is at the quarter end, he has cleared, there is no stress also. Then also that reporting needs to come?
No. See, this is you only have to do the reporting. The system will take care of its own. Okay, so that means like if somebody, in the case like if somebody has reported one as SMA2 or SMA whatever SMA, but after say 1 or 2 days that person is ready to pay. Okay,
no,
and
I'm not saying that reporting has taken place. Reporting is on a quarterly basis for SMA 0 and quarterly basis for SMA 0 and SMA 1. Let's say during the quarter, if you consider April to June quarter, someone was supposed to make the payment on 31st of April, but made that payment on 2nd of May. Now, technically, if you go count that 31 days is covered, but he has cleared that.
No. See, like I feel is what is that you have to report only quarterly, no? So as on that date, particular date, whatever is SMA 01 will only be reported, no?
Okay. And second.
Because by that time, suppose that account has become good, then what is the need of reporting?
Correct. And madam.
But you have to have the classification. You have to classify it at that particular point in time.
Madam, another thing, in case of non-cooperative borrower, there is no specific guideline given in which form, where to report, when to report. What we understand in Annexure 3, which is given in that circular, it talks about SMA 2 and SMA 0 also as and when it happens. So does it mean that non-cooperative borrower requirement is considered as SMA 0 and
No. See, non-cooperative borrower is totally different. See, SMA 0 and SMA 1, SMA 2 and all are totally different. Non-cooperative borrower is simply is not cooperative.
Then what is the reason, madam, in Annexure 3, SMA 0 is also covered?
SMA 0 is covered, see, but then, I am given to understand that for banks that SMA 0 thing is not there. So once that online thing starts, it will be bilkul uniform for both you and the banks. SMA 0 reporting, if it is not there for banks, it will not be there for you also. For hard copy, we have given you that SMA 0 thing, thinking that it is, okay, it would be, to have more information, that's all. But once the online thing comes, it has to be ditto both for banks and NBFCs, otherwise the system will not accept. So if it is not there for banks, it is not there for banks presently. So it will not be there for NBFCs also.
So for non-cooperative borrowers, what procedure needs to be followed? When to do the reporting?
Non-cooperative borrowers, it is given in the circular. See, non-cooperative borrowers, I think, both are different channels. Like, I say any account, whether non-cooperative or not, an account can become SMA 0, 1 or anything. But suppose an SMA 0, SMA 1, it will become based on the non-repayment. On top of it, if somebody is non-cooperative, and that accelerated provisioning or whatever it is there is to be done. Irrespective of whether an account is, what is that, classified as SMA 02 or whatever, if it is, he is a non-cooperative borrower, if you can establish that accelerated provisioning thing and all that will come. Both are not going together, that's what I'm saying. Excuse me? See, if company is only in financial services provider, not in lending business, is NBFC registration is required. Financial services means what? Consultancy? Investment, no. The investment is the classification of investment NBFC. Investment company. It is there in the registration certificate. It is given, no? Do you have are you an NBFC? Yeah. It is an investment company and your CEO doesn't have that investment company. What does it say?
It's registered to the R.B.I as an NBFC.
Then? Okay, see, one of the main reasons why is that investment company and loan company, the regulations are the same. There is no, only that, because of their activity, the differentiation is the regulation is the same. We are aware that even if certain companies are classified as investment companies, some of them are doing lending only. So we have not, gone after these companies, why are you doing that? That classification as such is not that stringent. So if your CR is not having investment company, then it won't be there. But if you are an asset finance company, it will be there. MFI, it will be there. Investment and loan company mainly because the regulation is not different. It can.
Okay, so the landing such kind of landing
or lending, if it is ordinary course of business, then see, you can do it because you are holding a registration with R.B.I, investment company and lending company. Though we would, really would like you to, basically into investment and not lending, but there is no restriction whatsoever for an investment company to do lending business because the regulation for both are the same. So an investment company can also do lending. There is no problem.
Thank you.
Only thing is that you have to follow fair practices code and all.
Definitely.
For lending activity, you have to follow fair practices code.
Okay.
On the asset side. See, investment company, there is no fair practices code per se. Fair practices code is
perfect.
So
at what point of time company has to consider the fair practice code?
Fair practices code and whatever other, fair practices code, because asset side and investment is not there. You can do lending, we will not say no. But if you are doing lending, fair practices code. But no need to have that loan company tag in the COR. No need to have. Even though you do not have that loan company tag in your COR, only an NBFC, you can do lending or investment, no problem. There is no problem.
And second question,
but only if you have, suppose you want a COR as an AFC, because there are so many dispensations given.
That is specialized.
AFC, IFC and all that is specialized.
Is there any requirement of R.B.I if the company jump into investment activity to loan company?
What is that?
Is there any requirement if an investment NBFC company jump into its business to loan lending business only?
No, I should told no. Presently no. Presently no. Because COR may be, the differentiation is not there. That is why it is. The regulations are the same in the sense fair practices for it is there, but other regulations are the same. Prudential norms are all same. And no dispensations given. Just because you are a lending company, no dispensations is given. Only thing is that, suppose if you are a lending company, if you are doing lending, for that you will get bank finance. If you are an investment company, you will not get bank finance. That all is there.
Is it necessary to take the acknowledgement from the client if we are issuing the sanction letter or enhancement letter or reduction in loan? So is it necessary to take the written copy from the client? Fair practice code is necessary actually, but we have large size of client actually, so it's practically it's not possible to take the acknowledgement from each and every client. So it is if we give 30 days notice, some kind of in later we will mention this. Any discrepancy is there, so can we mention this type of language in the letter? Yeah.
An NBFC is shifting its registered office address from one state to another. Companies acting is getting compliant. What is an NBFC has to do compliance? Shifting its registered office, I think you have to approach the regional office where you are registered. First you talk to them.
But yet we are not come up with the compliances as yet. We have sent a mail from ATM days back. Yet we have not received a proper list of what we have to comply, what we have to do.
You are not receiving a reply?
No, they are like, they are also finding it out from somewhere. I want to know what they are.
Okay. See, basically, if you are, this actually is under review presently. This particular shifting of registered office and all those things. But you have to, the regional office where you are registered should be aware. And then they will, have to shift all the things.
Yes.
Okay, they will have to see whether there are any supervisory concerns. Since you are a non-deposit taking company, there shouldn't be any problem.
So just an intimation in the due course and the process is going on would be enough.
No, you have intimated R.B.I, no?
Yeah, we have intimated.
Just wait for their reply.
For an answer.
Just wait for their reply.
Okay.
Is it Bombay?
Kanpur to Mumbai.
Kanpur.
It's presently in Kanpur. We are taking it into Mumbai. And what about the name change? Is there compliance?
Get prior approval of R.B.I. That is because you are not supposed to use the words bank or you are doing some financial activity, but your name suggests some agriculture.
In this particular case, the earlier name was something, and we are going back to the earlier name now. It was an NBFC registered with that original name. We had added one more word to it, and then we are removing that word again. So it's
I think there shouldn't be any problem. There shouldn't be any problem. Even the shifting of registered office also, there is no problem. Only thing is that you have to tell them, that's all. This is Samsung small office, no? They will be, trying to find out what it is.
Yeah, I think we are not aware.
But just wait for the reply. Kanpur, which is the company?
NCL Research.
NC?
NCL Research.
Research? But why it doesn't sound like an NBFC at all. Research and financial services. Just wait for the reply.
Ma'am, do we have anything like NPO, NBFCs? Do we have anything like NPO, NBFCs, like non-profitable organization working as NBFCs? Like we have self-help groups and...
That is not a company, no?
No, we have, like if we have a self-help group which is working at a vast level, do it require anything to be have to follow the regulations of NBFC?
No, that's what I'm saying. Is it a company?
Yeah.
Self-help group is a company.
That
is it a Section 25 company?
No, that is just, it's working as a self-help group.
No, so is it a company? So what is the structure? Or is it having a corporate structure? Self-help group normally doesn't have a corporate structure.
In its article of association, it does not have registered as a self-help group, but it is providing with those services.
True. See, I'll tell you what. See, there are, one is corporate structure company, doing lending, say for example, lending business, okay? Require registration with R.B.I 50-50, okay? Less than 50-50 hai, so even if it is a company, you don't require registration. That is first thing. Second thing is, it's not a company. It is called an unincorporated body. It could be a partnership firm or registered as a trust or a society. Doing lending, does it require registration with R.B.I? No. It will be governed by the particular act, partnership act or trust, whatever society or whatever. No, will not come under R.B.I. First condition is that it should be a company. What is a sanction letter and enhancement letter? I don't understand the sanction. Is it necessary to take acknowledgement from the clients while issuing sanction letter, enhancement letter? What is it?
Madam, the fair practice code, there is a requirement that important terms and conditions needs to be communicated to the client. And then it is written that acknowledgement needs to be obtained. This question, since there must be retail users where a lot of retail customers are there, where clients, there are many customers who are getting registered. It's practically not possible to obtain the acknowledgement of these terms and conditions which is given to the client and get confirmation from them. So if it is sent to the client, let's say by way of courier it is sent to the store, and if client has a clause in the letter where they say that within 30 days if client doesn't revert with any objective, any terms and conditions, it's acceptable to do. So whether that is okay with that, that's the question.
I don't think so. See, the point of this is that acknowledgement by the person is necessary. Whether you get by over post, within 30 days if you didn't receive, that will not do. You have to have the acknowledgement. If that person has not given you have given 30 days, the person has not given you acknowledgement, I don't think it will do. That is why it's called fair practices code. No? You cannot say I have sent a letter, he didn't respond. You have to, because by giving loan, if it is a, say, remote, somebody in remote area and all, okay, like for example, and that is why you couldn't, go, but then you gave the loan, no? You gave the loan. You gave the loan. And it is always better to tell him, make him understand, see, these are the terms and conditions. Get the acknowledgement then and there itself, no? So, anyway, you contacted him for giving the loan. Supposedly, acknowledgement is to be, received then and there itself. Acknowledgement is, fair practices code, whatever is there. Basically, whatever complaints we receive from, people, from the public against NBFCs, all are related to this. They charge higher interest, we were not aware. That is why this is important. They charged higher interest, we were not aware. See, they told us 8% interest. Now I see it is more than that. Because there would have been a clause, even if it is delayed by even 1 day, the penalty, some NBFC could, would have charged, mentioned the penalty would be some higher, very, some big amount. That the particular borrower would not have seen while availing the loan. It is there in the terms and condition. But simply he will say, this NBFC has charged more than what he told me in the beginning. So we will only say, were the terms and conditions given to him and did he acknowledge? That is why it is important. Is there any ceiling limit for changing interest from client? Is there any ceiling limit for changing interest from charging? Sorry. Is there any ceiling limit for charging interest from only for NBFC MFI? Only for NBFC MFIs, not for others. For others, it's all contract. For NBFC MFIs, the interest rate cap is there.
Madam.
1 minute. Can a non-depositing NBFC enter in other business, shipping? They can. You know, all what we are saying is 50%. 50%. You do shipping and all. Presently, there is no prohibition. You don't know in the future. Presently, we say only 50-50. And only with regard to certain activities we have mentioned, apart from the 50-50, certain activities we have mentioned, no, you cannot do. Like if you are doing derivatives, also somebody was saying, you know, interest rate futures, if you are doing, you can only participate as, for to hedge, not for taking, positions for speculative purpose. They can use that word, not for that particular, just for making profit. No, only to hedge your positions. So such, regulations are there for the apart from the rest of the 50. But otherwise, if somebody is going to shipping and all, I really would like to know if doing this high-end business like shipping, 50% will be in financial activity. Very, improbable. Somebody is going to shipping and all and having more than 50% as financial. I don't think it is that probable, but they can do if no restriction as such. Another is, can an NBFC buy land and develop residential property under infrastructure? Of course it can. It can buy land and develop residential property. But for deposit-taking company, there is some additional restriction. Purchase of land and some restriction is there. Non-deposit-taking company, it is not there presently. But again, the 50-50 only will come into real estate activity you can do. But 50-50 is the only thing. Real estate activity, particularly, there is apart from the as an R.B.I registered NBFC, how much maximum intercorporate loan can be accepted and how much maximum amount we can lend? See, lending to a single borrower, that is the exposure norms. To anybody, say if I am taking a loan from NBFC, say he can give me only that much, that is 15% of that NBFC's own funds. Okay, if I am a group, say Reliance, I have got 101 companies in my group. To that whole group, that NBFC's exposure cannot be more than 25%. But this is lending. The NBFC can lend as well as invest in Reliance Group companies. That total is 40% of its own funds. Such limits are there. But how much intercorporate loan can we accept? Intercorporate loan, intercorporate deposits, how much one can accept? I don't think there is any limit for that. If you are, so good and somebody is going to give you a lot of intercorporate loans, see, that is a source of funds, If somebody is willing to give you a lot of intercorporate loans, I don't think there is any problem. Liability side, except deposits and to some extent debentures and all, commercial papers and all, we do not regulate as such. Own funds. NDSI help. If it is your exposure norms is only for 100 crore and above. If you are less than 100 crore and above, there is no restriction for simple. Above 100, that restriction is there. If you are below 100, that restriction is not there. You can give whatever amount you want to one particular individual. Simply because we do not, because of your small size of the book, you are not treated as systemically important. You are only having 90 crore. Maximum how much you will give? 90 crore? Give. That is all.
Okay, friends. It was really a pleasure that Madam gave a valuable time and were able to solve all the queries of the members. I would request Shri Uttam Bagre to come and give a memento from forum to Ma'am.
निकल गया
Thank you very much everyone for attending the seminar. Hope it was useful. Thank you very much.